our topic for today is all about cost, volume, profit, or yung tinatawag natin na CVP Analysis. So sir, ano pong pinag-uusapan natin dyan? So here, in CVP Analysis, we're just trying, right, to know what is the relationship of cost with the profit at kung ano ba yung relationship ng volume to profit. Then based on these relationships, gagamit tayo ng mga tools, and then these tools will help the management, of course, to decide with regards to the operation of the business. Because once again, here in management accounting, our reports or the reports that are created here are actually for internal purposes. Meaning, majority ng mga reports ito or most of the time, asahan mo na hindi po ito nilalabas sa public. Maliwanag ba yun? Right? So, the first tool na pag-uusapan natin dito is yung tinatawag natin na break-even analysis. So, sir, ano pong meron sa break-even analysis? Here in break-even analysis, of course, kailangan mo munang malaman ano bang ibig sabihin ng break-even. Kapag sinabi nating break-even here, there is actually no profit nor loss. Ibig sabihin, right, kapag sinabi nating break-even, wala tayong profit, hindi tayo kumita, pero at the same time, hindi rin po tayo nalugi. Right? At mangyayari lang yan if and only if the total revenue is actually equal to the total cost. Liwanag ba yun, guys? Right? So, sir, paano po natin yan gagamitin for profit planning? Magagamit natin yan because based on this concept, actually we can know kung ilang units bang pwede mong mabenta at break-even or para magkaroon ng walang profit at walang loss. So, first, paano muna ulit tayo mag-classify ng cost here in MAS based on the last video na in-upload natin. Isn't it? We classify cost based on behavior. Meaning, meron tayong dalawang klase lang ng cost. Ano yung dalawang klase ng cost? Meron tayong tinatawag na variable cost and fixed cost. So, net income now is actually equal to sales minus variable cost. As you can see, hindi po cost of goods sold ang aking dinideduct. Liwanag? So, this figure, after deducting variable cost from sales, obviously is not the gross profit. But rather, ang tawag natin dito is the contribution margin. So, kapag sinabi natin contribution margin, it is actually the excess of sales, right, after deducting all the variable costs, and this amount is the amount used to absorb the fixed cost para magka-profit. Meaning, we have to deduct fixed cost now from the contribution margin because once again, itong CM ang pang-absorb natin sa fixed cost para magkaroon tayo ng net income. Liwanag ba yun? Ay ba tayo doon? Ngayon, ganito. I-convert natin to into an equation form. So, ang lalabas dyan is sales minus variable cost, then minus the fixed cost, right? Of course, lalabas dyan si profit. Ay ba tayo doon? Hatiin natin tong sales. May computation yan eh. Ano nga bang computation ng sales? That is the units sold, once again, units sold times the selling price, of course, per unit. And then, hatiin din natin or i-break down din natin si variable cost into the unit sold times the variable cost per unit. And then, minus fixed cost is equal to the profit. So, pareho silang may unit sold. Tama ba? So, ilabas natin yung units sold na yon. So, unit sold times selling price per unit minus, right, the variable cost per unit. So, nilabas ko yung unit sold sa dalawa. And then, minus fixed cost is equal to profit. Liwanag ba? So, kapag dinidak mo yung variable cost per unit doon sa selling price per unit, ang makocompute pa din dyan is contribution margin. It's just that, kung per unit yung dalawa, per unit din yung contribution margin. So, units sold now times the contribution margin per unit. Then, ilipat mo yung fixed cost sa kabila. Kung negative yan, magiging positive. Is equal to fixed cost plus the profit. Liwanag? Then, divide natin yan sa contribution margin natin per unit. Again, divided by the contribution margin per unit. Matatanggal ito, makakancel out yun. Tama ba? So, ibig sabihin now, units, alright, sold, or yung target, right, sales natin, once again, target sales, is equal to fixed cost plus profit all over the contribution margin per unit. Ibig sabihin ngayon, if gusto mong malaman kung ilang units ba ang ibebenta mo, once again, if gusto mong malaman kung ilang units ba ang ibebenta mo para magkaroon ng certain amount of profit, this will be the formula. So, formula now for the target sales, once again, is equal to fixed cost plus profit all over the contribution margin per unit. Pero, always keep in mind that the profit here is always the before tax profit. Once again, the profit here must always be the before tax profit. Meaning, wag mo muna dapat itanggalin yung tax. Maliwanag pa ba? Sir, akala ko ba break-even analysis tayo? Bakit po nagkaroon tayo ng profit? Alright. Well, dinaan ko lang dyan, pero actually, meron tayong ibang computation for the break-even point. Maliwanag ba? So, how to compute now the break-even point? Or, the units na kailangan mong ibenta para walang kita at wala ring lugi. Anag? Once again, kapag sinabi nating break-even, no profit at wala ring loss. So, ibig sabihin ngayon, same computation tayo dito. It's just that the numerator will just be the fixed cost. Sir, bakit fixed cost lang? Because at break-even, wala po tayong profit. So, the computation now is just equal to fixed cost divided by the contribution margin per unit. So, ganun po nagawa yung computation natin ng break-even point. Hindi lang yan hinulaan, but rather dinerive natin yan from the computation of net income itself. Yan ba? So, hopefully, nagets mo yan. Okay na? Ngayon ganito, what if ang gusto nating malaman is not the number of units or yung target sales in units, but rather, ang gusto nating malaman is the target sales natin in terms of peso amount. If that will be the case, asahan mo that the computation will just be the same. That's the fixed cost plus the profit na of course always before tax. But this time, rather than per unit, ang ating i-divide dyan will be the contribution margin ratio. So, ang ibig sabihin ngayon, same computation lang tayo dito. It's just that if peso amount ang gusto mo rather than units, the denominator will be the contribution margin ratio rather than the contribution margin per unit. Very good? So, let's talk about the contribution margin ratio. So, kapag sinabi natin contribution margin ratio, CMR, marami ang computation alright? May be equal to the contribution margin in terms of peso amount divided by, right, the sales, of course, in terms of peso amount as well. Ano ba? Pwede rin naman na contribution margin ratio is actually equal to the contribution margin per unit divided by the selling price per unit. Pareho lang ang makocompute mo. Anag? CMR can also be computed by, right, deducting from the sales ratio the variable cost ratio. Right? Sales ratio, right, always keep in mind na always 100% yan. Variable cost ratio on the other hand is actually equal to the variable cost divided by sales. Okay ka pa ba? Then lastly, contribution margin ratio is just the same sa fixed cost ratio natin plus the profit ratio. Right? So what is profit ratio? Profit ratio is the ratio of net income based on total sales. Then fixed cost ratio, of course, right? Yan yung ratio ng fixed cost over the total sales. So pare-pareho lang ang makocompute mong contribution margin ratio sa apat na yan. Maliwanag? So once again, balik tayo sa break-even point. If break-even point naman in peso amount ang gusto mong makompute. Same computation tayo dito, pero once again, since sa break-even, wala tayong profits, fixed cost lang ang ating numerator. Then the denominator will be the contribution margin ratio pa din. So this is the computation of the break-even point in peso sales. Anag, so sir, dami naman, 4 na. Kaya yan, alright. Then last na lang. Sir, paano po kapag target sales in peso pa rin po ang gusto kong makompute? Kaso, ang given this time is not the before tax profit, but rather ang given this time is the profit ratio. So if the one given is the profit ratio, asahan mo na fixed cost over the contribution margin ratio minus the profit ratio na ang ating magiging computation. So this is the last formula here sa break-even point analysis. Are we good on that? Diba tayo dun? So to prove na tama yung mga yan and to put into problems all these concepts, let's now move on here in illustrative problem number 1. Ready? So illustrative problem number 1, Regional Company is in business since 2028. Make swimwear to professional athletes. Analysis of the company's financial records for the current year reveals the following. So selling price per swimsuit is equal to 70 pesos. Next, variable swimsuit expenses, meron tayong direct material, labor, and overhead. That's 28 plus 12 plus 8. Or, this is equal to magkano yan, guys? This is equal to, wait lang. Nasaan na ba yung calculator ko? Alright. So, magkano nga ulit yan? This is equal to 28 plus 12 plus 8. Or this is equal to 48 pesos. Yanag? Then, 70 minus 48, makukompute na natin si contribution margin per unit. So, contribution margin per unit is actually equal to 70 minus 48, or this is equal to 22 pesos. Yanag? Then, fixed cost, on the other hand, based on total, is equal to 10 plus 24,000, or this is equal to 34,000. The company's tax rate is 40%. Steve Cruz, company's president, has asked you to help him answer the following questions. Requirement number 1, what's the break-even point in number of swimsuits? So, paano na nga ulit natin computein yan? Sabi natin kanina, break-even point is equal to the fixed cost divided by the contribution margin per unit. Right? Ilalagay natin dito, break-even point is equal once again to the fixed cost of 34,000 divided by the contribution margin per unit, which is equal to 22 pesos. So, ilang units ang kailangan nating mabenta para walang lumabas na profit at wala ring lumabas na loss? That's equal to 34,000 divided by 22, or this is equal to 1,545 units. Again, this is equal to 1,545 units. So, requirement number 1, 1,545 is our final answer. Ano ba? Requirement letter B, what's the break-even point in pesos? Sabi natin kanina, kapag pesos na or in peso sales na ang ating pinag-uusapan, same computation pa rin. 34,000, it's just that the denominator will be the contribution margin ratio. And paano nga yun ulit makompute? Contribution margin ratio is just equal to the contribution margin per unit divided by the selling price per unit. So, 22 divided by 70 is actually equal to 31.43%. So, 34,000 divided by 31.43%, this will give us how much? 34,000 divided by 0.3143, or this will give us 108,176. 108,176. That is why, or sabihin natin 177, say rounding off, right? That is why requirement number letter B rather, our final answer will be equal to 108,177. So that's the final answer for requirement letter Bravo. Next, requirement letter Charlie. Requirement letter Charlie, how much revenue must be generated to produce 40,000 of pre-tax earnings? Right? Sabi natin kanina, that's just equal to the fixed cost plus profit na before tax over the contribution margin per unit. So, apply lang natin yan. Right? So, ang tinatanong sa letter C is yung revenue. So, ratio ulit tayo. Okay ba tayo dun? So, target sales in terms of peso amount is equal to the fixed cost. Magkano fixed cost? Once again, that is equal to 34,000. Right? Plus, magkano yung profit natin? That's equal to 40,000 divided by the contribution margin ratio, which is 31.43%. So, magkano yung peso sales natin para meron tayong 40,000 na profit? Magkano lalabas dyan, guys? Tingnan natin. 34,000 plus 40,000 divided by 0.3143, or this is equal to 235,444. Again, this is equal to 235,444. Ano ba? So, final answer, requirement letter Charlie is equal to 235,444. Requirement letter Delta, how many swimsuits would this level of revenue represent? So, if target sales in units naman ang ating gusto, once again, gaya ng kanina, same computation, 34,000 of fixed cost plus the 40,000 of na profit. But this time, kung per units, dapat per unit din yung contribution margin ratio. That is equal to 22 pesos. Na-compute natin yan kanina. Anag. So, magkano ngayon yan, guys? Let's try to compute it. 34,000 plus 40,000 divided by 22, or this is equal to 3,364 units. Again, this is equal to 3,364 units. So, requirement letter Delta, final answer will be equal to 3,364. Anag. Requirement letter Echo, how much revenue must be generated to produce 40,000 of after-tax earnings? Kapag after-tax ang pinag-uusapan, hindi yan pwede. Why? Because sabi natin kanina, always before tax, dapat yung profit na ina-add. Anag ba? Ibig sabihin, kailangan nating i-work back yung pre-tax or before-tax profit. So, target sales, once again, in terms of peso amount, is equal to 34,000 plus doon sa before-tax profit. So, if 40,000 is after-tax profit, right? Then the tax rate, sabi ng problem kanina, is 40%. Asahan mo ngayon na kapag tong 40,000 dinivide natin ng 60% because nakatanggal dyan yung 40, lalabas na yung pre-tax or before-tax income. So, magkano yan, guys? 40,000 divided by 0.6, or this is equal to 66,667. So, 66,667. Peso amount ang gusto natin, so ratio dapat. So, divided by 31.43%. So, magkanong sales ang ating makukuha dyan? 66,667 plus yung 34,000 na fixed cost. So, plus 34,000 divided by 0.3143. That's the contribution margin ratio. Ang makukuha nating sales is equal to 320,288. So, 320,288 will be our final answer. Right? So, requirement letter Echo. Once again, requirement letter Echo. Lalagay ko dito, arrow, then 320,288 is our final answer. Next requirement, requirement letter Foxtrot. How many swimsuits would this level of revenue represent? So, kapag units ulit ang pinag-uusapan, kamukha lang ng kanina, ulit-ulit na lang. Target sales in units is equal to 34,000 plus 66,667, right? Divided by units ang pinag-uusapan, so CM per unit, which is 22 pesos. So, ilang units yan, guys? Alamin natin, 34,000 plus 66,667 divided by 22, or this is equal to 4,576 units. So, requirement, letter Foxtrot, 4,576 will be our final answer. Then lastly, requirement letter Giraffe, or Golf rather, what amount of revenue would be necessary to yield a profit of 20% of revenue? So, paano na nga ulit kapag profit ratio ang given? Dinideduct yun sa contribution margin ratio. So, try natin sagutan. Right? So, target sales in peso amount is equal to the fixed cost, which is magkano fixed cost ulit? 34,000. Divided by the contribution margin ratio of 31.43% minus the profit ratio of 20%. That's 20%. Right? So, magkano lumalabas na sales dito? Alamin natin. This is equal to 34,000 divided by 31.43 minus 20 is 11.43. So, divided by 0.1143, or this is equal to 297,463. Again, this is equal to 297,463. So, requirement letter Golf. Once again, requirement letter Golf, 297,463 is now our final answer. Are we good on that? Okay ba tayo dun? So, that is the first tool, which is the break-even point analysis. Okay ka na ba? So, ngayon ganito. In this problem, ang kinonsider lang natin is meron tayong isa lang na product. Maliwanag ba? So, what if marami na tayong product? If marami na tayong product, break-even point analysis will be different. So, sir, papaano na po ang computation if marami na tayong product? If marami na tayong product, right, of course, we have to consider na rin yung tinatawag natin na sales mix ratio. Ibig sabihin, in computing the break-even point, kailangan mong i-consider pareho. So, to illustrate multiple product or multi-product break-even analysis, let's now go here in illustrative problem number 4. So, here, baby company produces 2 products. Na yung dalawang produktong yun, love and loyalty. The projected income for the coming year, right, segmented by product line follows. So, we have 2 products here. Meron tayong love and then meron tayong loyalty. Selling prices are 30 pesos for love and then 50 pesos for loyalty. So, here, since given na yung selling prices and given yung total sales, compute natin ngayon yung units sold. Again, let's now compute the units sold. Okay na. So, 300,000 divided by 30, kasi 30 pesos ang selling price nila, that will give us 10,000 units. So, nakabenta tayo ng 10,000 units of love. Ilang loyalty na benta natin? 2.5 million divided by 50 pesos, or this is equal to 50,000 units. Right? So, magkano ngayon yung variable expense per unit? Alamin natin, 100,000 divided by 10,000. Of course, that's equal to 10 pesos. And for loyalty, that's equal to 500,000 divided by 50,000, or that is also equal to 10 pesos. Ibig sabihin, if selling price per unit is 30 for love, and 10 yung variable cost per unit, contribution margin per unit now is equal to 20. For loyalty, on the other hand, selling price per unit is 50 pesos. Variable cost per unit is 10. Therefore, the contribution margin per unit is equal to 40 pesos. Liwanag. So here, what are the requirements? Letter A, compute the number of units of each product that must be sold to break even. So, ilang units daw ang kailangan mabenta para magkaroon tayo ng break even. Liwanag. So here we have two products. Sino nga ulit? Meron tayong loved, then we have loyalty. Liwanag ba? So dito, the first step is compute mo muna si contribution margin per unit. And na-compute na natin yon. For love, that is 20. For loyalty, that is 40. So lagay natin 20, then 40. So sir, no next step? Next step is i-multiply mo yung mga yan sa sales mix ratio natin. Sir, ano yung sales mix ratio na yan? It is actually the ratio of the sales of each product. Well, here, 10,000 ang sales natin kay Love, 50,000 for loyalty. Sir, anong ibig sabihin yan? Ibig sabihin ngayon yan, sa kada isang Love na nabebenta natin, nakakapagbenta tayo ng 5 loyalty. So, 1:5 ang sales mix ratio natin. Panag? So, sir, pag nakabenta ka ba ng 10 loyalty ang mabebenta natin, tama yun. Alright? So, ibig sabihin, kung sales mix ratio is 1:5, lalagay ka ngayon dyan, 1 and 5. Panag? Then, magkano itong total? 20 times 1 is 20. 40 times 5 is 200. Ayun na. Then, adding these two will give us the weighted average contribution margin, also known as the composite contribution margin, which is equal to 20 plus 200, or this is equal to 220 pesos. Again, this is equal to 220 pesos. Anag ba? So, sir, after computing that one, ano yung next step? Next step is compute mo yung weighted average break-even point, or yung tinatawag din natin na composite break-even point. Sir, paano yan? Madali lang. Gaya lang nung kanina, fixed cost muna tayo. Magkano total fixed cost natin, guys? We have direct fixed expenses na 1,528, and then meron din tayong 100 na common. Tama ba? So, ang ibig sabihin yan, the total fixed expenses is equal to 1,628,000. Once again, total fixed cost is 1,628,000. So, 1,628,000 divided by the weighted average contribution margin of 220 pesos. Ilan ngayon ang nako-compute natin dito? Sabihin natin, 1,628 divided by 220, or this is equal to 7,400. So, sir, 7,400 na ba ang sagot natin? Hindi pa po. Alright? So, para makompute mo, last step, to compute the break-even point now per product for loved, that is actually equal to 7,400. That's the composite break-even point, times, pabalik dun sa sales mix ratio niya, which is 1. So, ang break-even point ni Love ngayon is 7,400. Anak? For loyalty, on the other hand, it will be equal to 7,400 times, ilan yung sales mix ratio ni loyalty? That is 5. So, ang break-even point now ni loyalty is equal to 7,400 times 5, or this is equal to 37,000. So, final answer for requirement letter A, that's to compute the number of units of each product that must be sold to break even. The final answers now will be 7,400 for love, then for loyalty, that's 37,000. Are we good? Next, punta tayo sa requirement letter Bravo. Requirement letter Bravo, compute the revenue that must be earned to produce an operating income of 10% of sales. So, kagaya lang nung kanina, compute mo muna si break-even. Sa contribution margin ratio. Contribution margin lang ang meron tayo. So, compute din natin yung weighted average sales. Once again, we have two products. We have love, then we have loyalty. Anag? So, magkano ang selling price per unit ni Love? Sabi ng problem kanina, 30 pesos, 50 pesos for loyalty. So, lalagay ko dito, 30 and 50. Times, dun sa sales mix ratio nila, which is 1 and 5. So, magkano yung total? 30 times 1 is 30. Then, 50 times 5 is 250. Then, adding these two will give us the weighted average selling price per unit, or the composite selling price, which is equal to 30 plus 250, or this is equal to 280 pesos. Anag. So, the contribution margin ratio now, or the composite contribution margin ratio, also known as the weighted average contribution margin ratio, is equal to the weighted average contribution margin of 220 pesos divided by the weighted average selling price of 280 pesos. So the weighted average contribution margin ratio now is equal to 220 divided by 280, or this is equal to 78.57%. Again, this is equal to 78.57%. Okay ba tayo dun? Are we good on that? So, compute na ngayon natin yung ating target sales in terms of peso amount. Because requirement letter Bravo, nung nga ulit, compute, right, the revenue that must be earned to produce an operating income of 10% of sales. So, paano nga ulit tayo mag-compute? Sabi natin, that's the fixed cost of 1,628,000 divided by the contribution margin ratio of 78.57% minus the profit ratio of 10%. Right? So, 1,628 divided by, ilan to? 0.6857. Tama ba? So, 1,628 divided by 0.6857, or this is equal to 2,374,216. So, requirement letter Bravo, 2,374,216 is our final answer. Okay, good? So, that's the first tool, which is yung tinatawag natin na break-even point analysis. Anag? So, that's the end of this video, right? The other tools will be discussed on the next video. Thank you guys. Bye-bye.